like us to wait until you are?
Well, we gotta get it to Logan so you can see the invitation, otherwise.
Okay, well, we have some other business first, so. We'll call the meeting of September 11th, 2018 to order. So, John, could you lead us in a pledge on this Patriots Day, solemn day?
My pleasure. Please join me in the Pledge of Allegiance. I pledge
allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you.
All right, we have a emergency item. Mr. CA, you want to lead us on the emergency item?
Well, if you are going to invite is Letty in the audience, actually invite Letty up to Director vote yes. She can fill us in on this emergency ordinance.
Yes, good morning. Letty Garza, Director of HHS and OES. What we wanted to do this morning, and I appreciate your flexibility to add this item, we have an emergency proclamation that we need to submit to the state in order for Trinity County to submit any type of reimbursement for expenses incurred during the Curlin and Delta fire. So getting this filed will initiate the start of our eligibility to submit any type of reimbursements for the county.
Okay, so your requesting is to be added onto the agenda.
Yes, please. I
I'll
apologize.
make a motion for the subsequent to be added on the agenda.
Okay,
Second.
yeah, first and second. Does this require a roll call?
Go ahead
Okay.
and do a roll.
Yeah, we'll do a roll.
Let's do it, yeah, just did that.
Supervisor Morris?
Yes.
Supervisor Finley?
Yes.
Supervisor Chadwick? Supervisor Mines?
Yes.
Supervisor Groves?
Aye.
Okay, thank you.
All right. With that, we'll actually do this up first. The request actions pursuant to Trinity County Code Section 240.070, ratify the Director of Emergency Service proclamation and confirm the existence of a local emergency in Trinity County pertaining the extreme peril to the safety of person and property caused by the Curlin and Delta fires.
As I mentioned before, this item would allow our county to submit any type of reimbursement to the state Cal OES.
Okay, any questions for Lee? All right. Do we have any comments from the public? All right, with that, we'll bring it to the board, back to the board.
Make a motion to accept the subsequent as presented for the emergencies.
Second.
All right, first and second. This is a resolution, so go ahead and do a roll.
Supervisor Morris?
Yes.
Supervisor Finley?
Yes.
Supervisor Chadwick?
Aye.
Supervisor Mines?
Yes.
Supervisor Groves?
Aye. All right.
Thank you.
Thank you, Lady. All right, so back to the normal agenda, county matters. These items are include non-routine or controversial matters that are listed alphabetically by department. A member of the board or staff may request an item be heard out of order. We have no other items, so we will do the clerk of the board. 1.1, conduct budget hearings for consideration for the budget committee's recommendation budget for fiscal year 2018-2019. Recommended expenditures total $183,850. And we're still loading.
Yep. We're about to talk the starting numbers.
So we will wait.
The supplement, don't throw the originals out because the originals have printed on the back side.
Yep.
So just add the supplement.
Thank you for that.
Good morning.
Good morning.
Welcome to the fiscal year 18-19 budget hearings, Trinity County. So the layout, I left the layout similar to prior years so to get some consistency on understanding what we're talking about. And first of all, we're going to go through and talk about the total budget, which you've already identified is the $118,083,850. This is a total budget for all funds except for school funds, independent special district funds, and agency funds. So it would be all of our general funds, special revenue, debt service, capital projects, enterprise, ISF, all that we do, and independent special districts, which are the two lighting districts. The total budget, you have the number there. It's a 10.21% increase from fiscal year 17-18, and that's a pretty big number. But what I would caution you on is we have a slide a little bit later to tell you what's really causing this. The big elephant in the room on this increase is the jail cost of $5.6 million that's in this budget. Or is it 15 million, 15.6 million that's in this budget. We have fully funded debt service payments in here for the COPs, 2005s, and the PUD paid back. In addition, 30.9% of the total budget is for salaries and benefits. We should see this percentage continue to increase over the years until we get to 100% of the OPEB costs, which we are not currently paying. So if we break out the total expenditures by budget, the total budget expenditures by function, you'll see that general government is up this year significantly. It's 24.01%. Half of that is the cost of the new jail. So what happens is while we build the new jail, it's considered general government, and when it's done, it moves over to a public protection upkeep maintenance cost. So that's the big shift on this page, but you can see that 25% is general government, of which I said half is the jail. Public protection equates to about almost 16% of the total budget. Your roads, facilities, about 25% as well. Health and sanitation is at about 18%, public assistance at 15%. The contingency, education, and debt service are a very small percentage of your total expenditure budget. So as we talk every year, we try to identify some of the major budget components, big ticket items. We've got 11.1 million that's budgeted for road and airport projects. 15.6 once again is the new jail construction, which is slated for this year. 36.5 million is the total salaries that make up that 30.9% of your total budget. We break it out further to show that 16 million is general fund, a portion of that, and 61% of our general fund budget. 20.5 million is non-general fund, and that's 31% of the non-general fund portion. We have an additional 10% increase this year in the OPEB cost, which takes us up to 70%. So we have 3 remaining years to get to 100% of our OPEB, which used to be entitled the ARC, annual required contribution, is now the actuarially determined contribution, thanks to GASB's 75. CalPERS is the first 1/8% reduction in the discount rate is taking place in this budget, 18-19. And there are some other items that aren't quite as large, but there's a new property tax system that is budgeted in here, and the rest of the dispatch system is also budgeted in here for the sheriff's office. General fund revenues. 40% of our general fund revenues come from taxes, whether that's property taxes, sales tax, TOT, timber yield, various different taxes. License and permits, about 4%. Fines and forfeitures continue to dwindle. They're about 0.27%. Our use of money and property is about 0.5%, which is actually up from 0.25%, so that's good. It's trending in the right direction. Intergovernmental revenue is about 14%, which is mainly your state and federal monies that flow through. So a lot of the health and behavioral health and social services revenues that come in would be in here, and some of the sheriff's grants, DA grants. Charges for current services, about 20% of our general fund revenue, and transfers in, which amount to about 19%. Understand that transfers in are simply moving cash. It's like a transfer from your bank account, from your savings to your checking. It's considered revenue here because it's coming in from very special revenue sources to fill or backfill those operating departments that have spent those monies. So everything else there, I think, is zeros right here. All right, so let's talk general fund revenues. So we're going to go a little bit deeper this year. Every year I kind of take a little deeper dive in educating both the board and citizens and departments. Departments are kind of aware of this, but this is more of an auditor thing. Those first 4 years that you see there, fiscal year 13, 14, 14, 15, 15, 16, and 16 and 17, your CAFR has been issued for those years. So those numbers are actual general fund revenue numbers as they have been filed with everyone and audited. Your 17-18 fiscal year is still in the process of going through the CAFR preparations. The journal entry deadline has not yet come. Is that correct?
Deadline has just passed.
Just passed. So those, we'll be doing a lot of work in the auditor's office to either increase or decrease this number based on journal entries and timing based on GAAP, which is something that other departments don't use, the auditor's office does. Just suffice it to say, we're just going to make sure they're in the right categories pursuant to what GASB wants to see. And they will then match what those first 4 years are. So what that means is that's basically a cash-based number current fiscal year 17-18. One of the things that needs to be pointed out here, and you can see that the general fund revenues are trending up there, and then the budget drops back down. One of the issues in fiscal year 17-18 that hasn't been addressed with the journal entry yet, because it happens a little bit later after our budget hearings, is PILT is usually received, our PILT money for 18-19 or for the budget fiscal year is usually received in the reporting year prior. So in June, we received about 1.4 million in PILT money, which is significantly higher than in the prior years. So that little peak up there is going to shrink down a little bit. It's currently at 27 million. It's going to go down to 25.6 million after we make that entry for the CAFR. Because that's revenue that we've received but not earned, and therefore it won't be available until next year. We have included that in the budgeted line under 18-19. The 1.4 is in there. And so that total is 23.3, which is basically 2.3 million short in our budget year from what we experienced in our 17-18 fiscal year. We're going to talk about that in the next slide right here. So this is a good, I really like this slide because I think it helps people to understand what's going on. So discretionary versus non-discretionary revenue. So discretionary revenue means there's no stipulated required spending for that money. It means you, the board, can make the decision on where you would like that money to go and to be spent. A non-discretionary would be something that we call as earmarked in a code or has been approved by citizens for a specific use, and they have to be spent within that criteria. Sometimes there's a very stringent requirement that can only be spent on equipment or can only be spent on additional employment. In other cases, the non-discretionary money has 5 or 6 different things that can be spent on, but it's usually in a certain function, whether it be public protection or health services or public assistance. So what we're really focused on you having a choice in is the red area there. And in fiscal year 13-14, that amount was $8.6 million. Okay? In fiscal year 18-19, that amount is currently $11.2 million. But you can see that in fiscal years, there was a jump between 14 and 15 of about $1 million of discretionary money, and that was due to our TOT amnesty program going into effect, a negative bailout legislation returning about $550,000 to $600,000 to the county. That's an ongoing, we get that every year. Property tax growth has been trending up, but slowly going up. And the triple flip program ended in that year as well. So we saw a bump of $1 million, but over the next 2 years, it's been pretty much flat. You see a little bump there in the 17-18, but remember, 1.4 million of that's going to disappear because that number currently is 11.4 million. So when we take 1.4 out of there for the PELT, when we do that journal entry for the CAFR, it's going to take it back to 10 million, which is the exact number it was in 15-16. So once again, 15-16, 16-17, 17-18, discretionary money, the money you can spend any way you want, has been flat. In the current year, we are up 11.2. Part of that is because the PILT money that we're going to shift from 17 that we've already budgeted into 18, 19 is 900,000 higher than it was in previous years. We've already checked with the federal department. That is a one-time increase. It's going to return back to our normal 560, 500, Angie, is about 570?
About 5%.
About 570,000 normally. So it will be returning to that in 1920. The other difference of the 1.2, which leaves about 300,000, is basically tax increases, property taxes, sales increases that we're seeing from the prior year. So if we go to the top part of that and we talk about non-discretionary, for the most part, this is going to be a lot of this, or the majority of this, is the intergovernmental revenues, which is the money that comes from the federal and the state. And a large chunk of this has to do with health department, health services, this levy here. So you'll see that the expenditures have kind of peaked in 16, 17, 17, 18. And remember, 17, 18 is subject to adjustment if there's still journal entries that haven't been processed. But you can see that there's a bigger expenditure in 16 and 17, 17, 18, but the budget for 18, 19 drops considerably, at least $2.2, $2.4 million of a drop in expected expenditures in those areas. And that accounts really for the difference between the 2 years. Your property tax apportionment, this is pretty consistent year after year. What this is every dollar of property taxes that is charged gets split apart, and the county receives 32%, the schools receive 64%, and then the special districts that are in that specific tax rate area, their total take on the dollar is about 4 cents. And not every special district gets 4 cents. That's all the special districts that then split up the 4 cents on a dollar.
Quick question, what's the total revenue that pie chart's representing?
The total property taxes that came in,
48, 50?
total, the 100% of property taxes that came in.
That's split up that way.
Let's see, we're gonna have a county portion.
Yeah.
Angie, do you have that with you?
Not the total amount?
you have the county amount?
The county map. Excuse me. So, as for the actuals for 2017-18 for the general fund, we have approximately $7,886,735.
And just to be clear, that represents the 32%.
That is correct.
Okay.
Yeah, so if we take and divide that by the 0.32, it gives you 24.6 million.
That we bring in total property tax?
Yes. Yeah, remember that 2/3 of that goes to the public schools.
64%, I know that, and that's something I've just been trying to find out is what
Yeah, so
that
close to
total
16
property
million goes
tax
to
and
schools.
income is.
Yeah. So that's a little bit, so if it's if it's an 8 million for the county, it's 1 million for all the special districts to share. That were there when Prop 13 went in.
Exactly.
Because some of those districts don't get any property tax, right? All right.
Basically, what I was looking for is what the schools get out of, what constituents pay to the schools when they pay their property tax, instead of just saying 63% or whatever, I can give them a number.
About 16 million, right, out of those. All right, so general fund expenditures, we're talking only the general fund at this point. General government is 24.7%. Public protection is just under 60%. Health and sanitation is 14.4%. The main two players in your general fund expenditure budget for discretionary are general government and public protection, as you're going to see in some future slides. Your health and sanitation amounts are more along the lines of those non-discretionary revenues. All right, so general fund expenditure trends over the last few years. Once again, the same thing. The first 4 years are CAFR numbers. They are good, actual, not going to change numbers. 17-18 is subject to journal entries and accruals and various things. So that's a cash, a current cash number as of, I think it was like August 23rd. And then the budget amounts, what we anticipate for 18-19. So we go from 17 million here on the left with fiscal year 13-14 up to 26.3 in the budget year. You can see that our general fund expenditures pretty much continue to creep up on a regular basis. A good part of that is your 10% every year OPEB amount that's forcing that. There's also been an increase in the indirect cost, which kind of creates a double whammy to your non-cost center departments or your service departments. And what they're doing is they're getting hit with their 10% OPEB, and then the cost centers are being allocated through the cost plan out to those departments. So that's why they're seeing some high increases to their indirect cost numbers. It's one of the reasons. All right, so this gives you a trend in the function area of starting from the bottom, the darker blue, that's the 13-14 fiscal year, going up to the 18-19 year, which is the orange. And if you start at the top of education, you can see it's pretty consistent, but if you were able to see it, which is difficult on that screen there is a slight increase. It kind of trends with the overall expenditure one we just looked at. That's because they're incurring additional indirect costs and their OPEB 10% hit. The health and sanitation, you can see there, it's a more volatile from year to year, and that has to do with whether federal and state monies come in, how they come in. I believe the last 2 fiscal years we've had some significant revenues that came in that are not necessarily going to transition in the 18-19 years. So it's going to be probably a need for them to use more of their realignment monies to cover some of that shortfall. General government, public protection, you can see that over the years, they have both increased each year. Once again, that's going to be caused by your OPEB, that's going to be caused by cost increases. It's a significant jump in the current year. I'm trying to think, general government's significant jump is due to their property tax system that we've budgeted in here, new property tax system, because the Crest, your existing property tax system, which collects that $24.7 million, is quickly going by the wayside. Many of the clients that are on that are migrating to different property tax programs, I believe, and Angie and Shanna and Terry could probably answer this better. I believe that Crest is looking to retire because it's a homegrown system.
So a couple of years ago, whoa, Angie, you're right. So a couple of years ago, all the bigger counties started dropping off of the Crest system. And so we went down there, Julie, my sister and I, and then Lake County, another smaller county, went to Redding and met up with them. And they said they have a 5-year plan. That was like 2 years ago. And I think that their 5-year plan is really going by the wayside because every year another county drops off and another county. There was about 9 or 10, I believe, counties, and this was before my time, that started this property tax system. And there are only 3 or 4 of us left, small counties, Alpine, Lassen, and Trinity. So in order for them to continue to operate without bumping up our maintenance fees so high, I don't see how they're gonna be open for very long. So that's why I've been talking, and really put with Craig this year that, we really need to act and do something to, or we're not gonna have those discretionary dollars to have with the property taxes.
So when we had the scenario this year of the PILT money bumping up to 1.4 from the normal 570,000, we said this might be the perfect opportunity for that one-time use to protect your discretionary, your largest discretionary revenue, which is property taxes. 75% of your discretionary revenue comes from property tax. So if we have a failure in Crest and can't get tax bills out and can't get the collections in, we're going to have catastrophic problems in the departments and being able to fund positions and different things. So that's why we've included it in the current year budget. All right, so this is basically the same data as this, shown in a different way. So sometimes it's easier just to see it this direction. You can see that the red is public protection. Red is public protection, and it is increasing each year. The blue is, again, general government is also increasing, and then the purple is your health and sanitation, which is sporadic depending on federal and state funding. And then your education is the orange, and you can see there it's pretty consistent. And there's a green in there somewhere. Oh yeah, 15, 16. That's your public ways and facilities. The reason that's a small number in this chart is because this is where discretionary money is going to pay for minor projects. And in that year, we had more than just minor projects. You can't hardly make out the green in the other, but there's about just under 100,000 in each of those years. And those will be projects that couldn't be funded with your state roads money in the actual road department. So general fund discretionary budget. All right, so we have $14,194,834 of discretionary. What I want to point out in this is that 3.35 million of that is slated as cash carry forward from 17-18. And currently we are targeted to make that, Angie, because I realized that one of the items we were reducing was actually supposed to stay in there because it's in this number as well. So we had a scare yesterday with that. We were short of $500,000, but we weren't. you can, so understand that 3.35 million of that is cash carry forward. What that means is we brought in, potentially, we either brought in revenues that we had not budgeted, that were discretionary, or departments were good in not fully spending their budget and coming in under their expenditure budgets. Those two combining will give us cash carry forward, which we use as a fund balance, if you will, the general fund to fund our future budget year. In addition to this, so that's important to know, and there's a contingency set up of about $316,000 also out of this, which reduces that number. So our real discretionary revenue that's actually coming in that current year is about 11.2 million, which is tracking back with those other sheets. That's why this number is different. It's cash carry forward in this number. So of this discretionary budget, about 32% is going to general government, about 3% to education, health and sanitation 6%, 6.5%, and public protection gets 58.5%. So the jail is not in these numbers because the jail is being funded in a non-discretionary fund. That's why it's in the total budget. All right, so when we look at general fund discretionary budget, what we're trying to show you in this chart is these are the budget officers and what percentage of that money that they are responsible for. And one of the things, if we go back, let me go back here. So if you see the public protection down here, 58.45, and you come over to this schedule here and you start adding up sheriff, chief probation, district attorney, you're going to find out that adding those three percentages, you don't get to that total number that's on the pie chart. The reason for that is that some of the public protection departments are under some of these other budget officers. For instance, your public defender is under the auditor controller. So public defender is not 15.030 because the auditor also does debt service, she does auditor, she does a bunch of different things. In addition, H&HS has the OES department and it has the public guardian, which fall under the public protection area. So that's why this won't necessarily add up to the pie chart in case you have those questions. All right. On the left, looks like Pac-Man's going to eat the other one. On the left is the total budget, broke up between the general fund portion and the non-general fund. So that total should be the 118,083,850. So the general fund portion of your total budget is 26,344,771. We go over to the right and you can see there's the discretionary 14,194,834. Of which again 3.35 is cash carry forward, and then the non-discretionary portion of 12,149,937. All right, debt service. As we all know, we didn't have to pay the POVs because they were paid off last year. Although we had savings from that, the OPEB and the indirect costs pretty much ate that up for departments and probably then some in some departments. The 2005 COPs are, and the PUD project agreement are the remaining debt of the county, and our total payments that are budgeted this year are $680,000. For the COP 2005, we initially borrowed $4.56 million at 8.5%. The outstanding balance there on the fourth one, our principal remaining to be paid is $3 million. And our annual payment this year is $530,000. Payoff is anticipated to be January 2026, but is subject to the refinancing, which my understanding is the county is close to completing that, and we'll hear more about that at a different meeting. The PUD project agreement, initially we borrowed just under $2.1 million. It's a variable based interest rate based on LAIF at the state level. Our outstanding balance currently is $674,000. annually we pay an amount not to exceed $150,000 of that principal. And so we anticipate that the payoff will be approximately June 2023. So what's happening now? What's starting to hit us in the fiscal year 18-19 budget? Jail construction. Our RFP is slated, I believe, to be released in the next 3 months. DOT, can you confirm? Yes? Yes. And state reimbursements to begin once the construction starts. Debt refinancing is in progress, and I believe that they will be presenting at a future board meeting when all the paperwork has been finalized. Labor negotiations are underway. We're trying to get a fiscal impact of the class and compensation study we'll have on the budget and the workforce. So these are things that are happening now. The CalPERS retirement discount rate reduction that we've been talking about for the last 2 years, that first 1/8% reduction on the discount rate happened in this year. And next year, another 1/8% will occur for a cumulative 1/4%. And then another 1/4% in 2021, which will be that full 0.5% reduction. Our OPEB, as we talked about a little bit earlier, GASB statement number 75 was passed, changing the way that we handle OPEB. And the most important part of it is under 46, the old standard, they kind of allowed the iceberg of OPEB to be revealed, the debt to be revealed based on if you were not paying the full ARC, what portion of that you were not paying would be recognized on the face of your financial statements. 75 takes that away and says, just like retirement, we're going to put it all on there. We're going to have these deferred inflows and outflows of resources that we're going to have you put on your financial statements, and then we will monitor it on an ongoing basis. So the good part of those statements are you're going to see the full amount of liability. The bad part of that statement is that liability can fluctuate up or down based on trends of investment versus actuality. So currently the county is paying 70% of the ADC. One of the other things in GASB statement 75, because you can see the discount rate on CalPERS and we know the fiscal impact from that from prior years, being about $600,000 per 1/8%. When we look at, I didn't change that, I apologize, that bottom bullet there, 1% drop in discount rate, that should be 2.4% drop. And discount rate is the 1.715, so that's a change for you. And I'll change it before we post it on the website. But GASB 75 states that if you're not paying, instead of, okay, so let me back up. This is going to be confusing a little bit. So let's talk the old standard. The old standard was whatever of the ARC you didn't pay, that portion showed up as a liability on your balance sheet. And then it became a portion of your ARC the next year in addition to your normal cost, which was your current active employees plus an amortization of the UAL, the unfunded actuarial liability. Okay. This statement says we're going to show all the debt now, right? But on the discount rate, we're going to let you, if you're paying the full ADC, which is the old ARC, we're going to let you use a discount rate of 6%. But if you don't pay the full ARC, if you pay 99.9% but not the full, we're going to make you use the 3.6%. Okay? So the difference between that 6% and 3.6% for Trinity County is like $20 million in your UAL or more. What that means is, in that last slide there, changing the 1% to 2.4. I got it right now. You can see that at the 6% discount rate, it's it's just under $7 million a year. When it goes to 3.6, you add the 1.7 on top of that, so you're at 8.7 million per year OPEB cost at the 3.6. So it's important that over the next 3 years, we continue to get to that 100% of ADC so that we recognize the 7 million ADC number versus 8.7 or 9 million by the time we get there in 3 years. All right. So with that said, what's on the horizon? Well, we've talked about revenue opportunities. We talked about a 1/2-cent sales tax increase to help fund the public safety needs of Trinity County, which would be the sheriff, jail, probation, juvenile hall, district attorney, public defender. Had we had a 1/2-cent sales tax in place for 17-18, it would have brought in approximately $535,000 more discretionary dollars for that purpose. Or even maybe not even discretionary, it could have been non-discretionary, it could be earmarked for public safety. On the second bullet, there was a discussion of a transient occupancy tax or an attempt to get that to increase from 5% to 10%. If that had been in place last year, it would have brought in approximately $275,000 more dollars in discretionary revenues. So that's a total of about $800,000 per year that additional that we could have to go help in the service area of Trinity County. So transient occupancy tax audits would be our next step after our amnesty program. I know that there's a request from the Treasurer Tax Collector Department for an additional person to help with services and function down in that office. And perhaps, and I think I mentioned to her that we would need to have a discussion at mid-year to see if we can't get that additional position in place. But we'd like to make sure that we can generate some more revenue with that, if possible. The fourth bullet is court fees, fines, and forfeitures. They continue to decline the last 4 years. I believe that the county, I've seen an agenda, I believe that the county is meeting with the state and the courts to determine why this is happening and see how we can resolve it. Why this is important is because there's a maintenance of effort requirement that the county has to contribute so much money based on revenues back in 2001 through 2004, 2005, something like that. And we're not collecting as much revenue as we were collecting back then. And the revenue amounts in code have increased. So there's definitely an issue with this. With that, I complete my presentation of the budget and would open it up for any questions that you all might have. Yeah, exactly. Now they'll automatically turn on.
There you go.
All right. To the board, any questions?
Just play with the lights.
Playing with the lights. Go ahead, Ms. Joe.
Thank you for the presentation. I have one question. You made a statement multiple times about journal entries that haven't been processed. Is there a time frame or restraint? Thank you.
Okay, so what happens is you have a period of time from the time we get year-end close, to close up all of the work that's out in the departments and get it submitted to the auditor's office. And then there's a year-end process that occurs in the auditor's office to convert the data from cash basis to GAAP basis, which requires a lot of journal entries. Estimate 50, 60 journal entries that have to occur. Analysis, 80. But the main one that impacts this presentation is the fact that the PILT has not been moved from revenue to unearned revenue, which is on the balance sheet for GAAP. So that means it's not going to show up in that revenue number. It's not going to flow to fund balance. It's going to be sitting in unearned revenue, but we do have it already in the budgeted number for 18-19. So that's the main journal entry that impacts this presentation, but there can be other accruals of expenditures. For instance, if a vendor has been working on a project from April through June, but didn't get their billing in until, say, August 25th, and the department wasn't able to process it by a deadline, we're still required by GAAP to take that expense back for our CAFR purposes, but not for budget purposes. So that's why I'm saying there's kind of this journal entry process that can change those current years, prior year, not budget year.
So those payment in lieu of taxes, you also, the bill you referring to, you also said they're going forward, they're going to be a change in that revenue?
Yeah, so in 16-17, we got about 570,000 for PILT. In, what's it, what did I say,
16, 17?
17-18, we got 570,000. We received the 18-19 money in June of 17-18, which is 1.4 million, which is a significant jump from our normal. So we called, and I think Angie called to get information on this to say, is this a new number? Because we love it if it is. But is it a new number or is it a one-time? And they said, no, that's a one-time. It's going to go back to the 570,000 in 19-20, which we will receive in 18-19 in June.
Thank you.
Bob, if you want to take a look at page 272. If you want to look, when you get there, you want to look down towards the bottom, like the third account tab, which is account 7780, federal tax in lieu. You can see that the actual in 16-17 was $566,533. Right now, if you look at the actuals in 17-18, it's $1,997,980. If you look at the next column over, that $1,423,000 is already combined in that $1,997,000. So we actually have to do a journal entry. We called it, it's a deferred unearned revenue. So we got to move it from this, or from fiscal year 17-18 into fiscal year 18-19 by a journal entry in order for it to be in the appropriate year that it's intended for.
So
Thank you so much.
is there anyone here from the public with a downloaded copy from the internet of the budget, or that you're looking at that? Because that page number that Angie referenced at 272 is likely to be about 5 pages later in your document, just in case you need that.
Angie, did they give a reason why the windfall came?
They said they were playing catch up over the past years, and therefore, based on the amount of money that they shorted the counties over the prior years, they caught up during this current fiscal year, and not to expect it in the future that we would be back to the standard that we are currently at.
Okay, thank you. Supervisor Morris.
Also, there's some efforts from counties, I think, on trying to increase that amount at the national level. So I think we were looking at joining some other counties. Does that ring a bell?
Yes, that's correct.
Okay, so it could change to our advantage down the road, but we don't know.
I do want to make a clarification that the Budget Committee did not recommend doing a TOT or a sales tax in this. It's just informational what would happen if.
Correct.
But we did not recommend doing that, for the record, so. Okay, let's open it up to the public. Any questions?
Just one last thing, and just a big thank you to all the departments and all of their staff for all the hard work that you guys do in budgets to get information to us, good information, and we really appreciate it. We couldn't do it without you, and we wouldn't want to.
All right, no public? Yes.
I'm Donna Daly from the District Attorney's Office, and you did indicate that, I'd like to know how you define public protection when you're talking about 58%.
So public protection is based on the state controller's office accounting manual for counties, and they define that with a listing of various department functionalities.
So it's OES, public defender, district
Oh,
attorney?
you're gonna have, yeah.
So when you're talking about public protection, you're talking about the planning commission, you're talking about the agricultural commissioner?
Yes, anything that fits under the state controller's guide, the accounting guide, would be considered public protection.
I had an additional question, and that was, is there an increase in the general government fund simply because there's been a redefinition?
No, the increase in general government is primarily from the new property tax system, which is approximately $800,000 to $900,000 for the first year maintenance fee of the new property tax system.
Being new to this,
No, yeah.
on page 11, it appears that there's an increase by 17 million for the expenditures for general government.
So where are you at on page 11?
At the very top, general government, the 2017-2018 actual was 12 million, and it's increasing to 29 million.
So remember that 15, is this general fund? It's governmental funds, it's all of it, right? Angie? It's all of it, right? The jail, the new jail construction is in this number?
15.6 million of that is the jail, correct?
Right.
And is this expenditures, or is this fund, is this revenue?
Expenditures.
So yeah, financing uses would be expenditures. Sources would be revenue.
Okay, and so the jail is being included as general government instead of public protection.
Right.
And then public ways and facilities, there's an increase of 20 million.
That's correct. Those are going to be earmarked funds for the road departments and airports. I didn't bring that this way, she brought that this way.
Okay.
So there was 11 million in airports.
11.1 was the road department and the 3 airports.
Those are non.
I think the other, there's a budget for their 2 reserve accounts, which is their working capital accounts, which is about 12 million of this number. It's so that they can do their work and then get it reimbursed from their state and federal monies. And this is all, it's all basically the DOT is the primary in this, probably 95% of this.
So it's going to be reimbursed.
Right.
And so then the actual increase only for the public protection is only 3 million.
Yep.
Those were all my questions. Thank you.
Welcome aboard.
Craig, I have a quick question. Those numbers that you pulled out for solid waste, under, I think it was solid waste, or at least those DOT dollars, were not general fund dollars.
Which ones?
The ones that you were just discussing.
No, well, the only general fund dollars in that 30 million is like 70,000,
Right.
$71,000.
Rest of them
The
are
rest of
just.
it is all intergovernmental revenues or the use of their reserves that they use as a cash flow base.
Right, because I just wanted to make sure that folks understood it wasn't general fund dollars.
Yeah, that, remember they were the green ones that
Yeah.
only showed up in a 1 year, all large enough to see it? It's because they're always under about 100,000 of general fund monies.
Okay, any other public comments? Okay, with that, we'll bring it back to the board.
I'll move to approve.
I'll second.
Okay. Morris Chadwick.
Supervisor Chadwick?
Aye.
Supervisor Morris?
Yes.
Supervisor Myers?
Yes.
Supervisor Finley?
Yes.
Supervisor Groves?
Aye. And I want to thank all departments, Greg, Andy especially. This format that we've been doing for the last 2 or 3 years anyway is working really well, I think, so. Thank everybody for that. And with that, we are adjourned at